today's video, we're going to show you how to initiate a trade by using Chartacus's high-performing strategies section on the Octorotus logs page and use the Chartacus trade track to manage it all the way to the exit. Therefore, let's go to the Octorotus logs and open the high-performing strategies tab. Notice quickly in the main page the reward-to-risk ratio, or RR ratio, which measures how many dollars a strategy is returning for every dollar risked. Neither one of them is better than 2.0. Which is the minimum you would want for any individual strategy. This means that the markets, which you likely have noticed, have been very volatile. In fact, the strategy sell signal RR is higher overall than for the buy signals. You should always take a quick look to see where these are and how they're trending. Now let's go to the high-performing strategies tab. Notice on the left side, which is the y-axis, you have the RR ratio. So the higher up the dot is, the higher the RR ratio. On the lower scale, the x-axis, you have the win percentage. The farther right you go, the higher the win percentage. So ideally, you're hoping to find strategies that are winning greater or equal to 70% of the time and returning more than $2 for every dollar risked. So you're really kind of in this section right here. Note the first gray horizontal line you see is 2.0. So it appears only one strategy is returning at least $2 for every dollar risked. It had a 73% win percentage so far. Sometimes this is the case, but at Chartacus, we're very transparent about it. And why should you risk money if there isn't an obvious trade for you and right now? In our opinion, there's only one strategy to consider here, this one. So let's go to it and click it. And you see it's Siege Tactic, where the strategy is called Siege, and the tactic is number 3. Win percentage of 73. It has a reward to risk ratio of 2.42. It's had 802 different signals, and 582 of those are wins. And it has one new trade today. Let's click it and see what it is. EDZ. I'm going to copy it here. Now I keep the dashboard open at all times. It's convenient to have them both open. Now I can just paste it below and quickly apply. EDZ is on the NYSE ARCA exchange, so it's likely an ETF, and it closed at $8.78 after declining 3.25%, and this is the prior day. So let's open it up. Yep, it's an emerging market bear ETF. That's an exchange-traded fund that makes money if the emerging markets decline. Look at the entry section. There were 2 signals today, right here. But as you see, only one, the Siege Tactic 3, has a good enough RR and win percentage to justify the review. Now look at the 5-day chart. It pretty much has been declining as the general markets have been going up the last 5 days. Makes sense, right? Because this is betting on if emerging markets are declining. And so far, the last few days or the last week, I would say, markets globally have been increasing. Now let's open the 4-month chart. This has been quite volatile. You see, prices have been bouncing from the high regression channel to the low regression channel, back to the high, through the high, and back down. It looks like it's coming down to possibly retest the lower regression channel support area. Now, normally, I would rather feel more comfortable if it was already there, because to me, this represents a place where it likely may retest before it bounces back up. And I feel better about taking more risk at this area, so it's a little far away from right now. All right, let's go back to the entry section for the strategy. It says the target to shoot for is $9.05, or about 3.13%. It also says to place a stop order for risk management, stop loss order at $7.94, which would be a 9.5% loss if hit. Now remember, this is all based on trying to buy the stock at or below the closing price of yesterday, which was $8.78. In truth, I would not take this trade because you're risking nearly 10% initially in the stop loss order for a 3% profit. But you know what? We're going to take the trade as a simulation in order to show you how to enter the trade and then manage it afterwards using the Chartacus Open Trade Tracker. Therefore, I would place an order to buy EDZ at a limit price of $8.78, which means buy it at that price or lower. Limit prices are at every brokerage firm where you make trades, so you'll have no problem placing that trade. So let's continue forward and put in this mock trade and wait for the markets to open. Oh, and today's date is August 19th, 2024. All right, the market just opened and the trade would have been executed at $8.65, so that is our entry price. If we're going to follow what Chartacus does in this trade, then we have to enter the stop loss order at $7.94, and the target to sell EDZ at a limit price of $9.05. If you're trading at a place like Schwab, you could actually enter both these trades at the same time. And if one of them gets executed, the other one will be canceled. These are called conditional orders, and this one is specifically called an OCO order, or one cancels the other. If you are not trading at a brokerage that has these types of orders, then what you're going to have to do is you still need to practice risk management first and foremost. So therefore, you'd have to enter the stop loss sell order at $7.94. Stop loss orders are also called stop market orders because if the stock trades at that stop price, the order will automatically be executed as a market order. Now that's the initiating trade. You bought the stock and now you have a sell stop loss order in at $7.94. You'll be keeping an eye open to the trading prices to also watch for the target price of $9.05. And this will be more of a mental placeholder. And if the stock moves up to the target price, you'll have to change your existing order to a sell limit order from a sell stop loss order. Very easy to do, and you can do that at any brokerage firm. One last thing. For all of your orders, you can place it for the day, and that's called a day order, or as a GTC order, known as good till canceled order, which usually keeps the order open for 60 to 90 days, depending upon the brokerage firm you trade at. I normally place good till cancel orders because then they'll stay open, and later you can just make changes to the trade if Chartacus does in the open trade tracker. That's it. We'll add EDZ to our watch list by clicking this plus right here. You can go to the watch list, and there it is. And then we'll come back in the morning and check it to see if Chartacus makes any adjustments to the stop or target price. Remember, the strategy you're going to be following daily in this trade for EDZ is Siege Tactic number 3. And today is day 1 of the trade. See you tomorrow. Okay, it's the next day, Tuesday. It's day 2 of the trade. Let's recap. On Monday, which was yesterday, we executed a trade from a signal that was generated after the close of the markets on Friday, which was August 16th. Then we followed Chartacus on the trade by buying near or better than the close price on Friday. And we did that. We got filled at 865. Of course, this is a simulated trade. Then we set our stop loss to $7.94. And we're keeping a mental target price of $9.05. So if it hits, we'll switch from the modified order, the sell stop order, at $7.94, and we'll change it to a sell limit order of $9.05. Okay, so let's open our watch list. Let's see what Chartacus is doing on his EDZ trade today. All right, let's see. There were 2 more new signals today, similar to those that we saw yesterday. We're going right to the Chartacus Open Trade Tracker and click Show All 4 Trades. And we're going to go look for an update for the August 16th signal for strategy named Siege and tactic number 3. And that turns out, first one right here. And there it is. Chartacus updates the following. Trade remains open, but an exit signal occurred. Chartacus would set the stop to the current low of the day, and since this is before the market opened, Chartacus means the low of yesterday, which was $8.49. So basically, Chartacus is seeing greater risk in this trade due to the decline seen yesterday, and is immediately raising the stop loss order by 55 cents. And by doing so, if EDZ keeps declining, then Chartacus has reduced the potential loss on the trade. Many professional traders will have rules based on their analysis of that strategy that says something like, this strategy normally goes almost immediately in the right direction. But if it doesn't, then the odds are really high that the trade will probably not return a profit. Therefore, they will immediately add a rule that says, this starts going down south immediately, I'll raise my stop loss order. And that's what Chartacus is doing here. This trade needs to make a 180-degree turn now and go positive. Otherwise, we're going to probably be out of the trade quickly. So let's log into our brokerage account. Let's change the stop loss order from a sell stop market order of $7.94 to a sell stop market order of $8.49. And with that completed, let's log off and wait till tomorrow. Remember, the target price is still intact, it's still live. So you may want to check EDZ's price today at various times, just in case there is a turnaround, okay? This was day 2 of the trade. I'll see you tomorrow. All right, good morning. It's day 3 of the trade. Let's check into the site and see what Chartacus is doing. Once again, we're looking for the trade he's managing from August 16th for Siege strategy and tactic number 3. Let's go back to our watch list where we kept it. Let's open it up. Today it has 3 additional signals to buy. Let's show all 7 trades. Look for Siege number 3 from August 16th. Here it is. Similar to yesterday, it says trade remains open, but an exit signal has occurred. Chartacus would set the stop to the current low of the day, and since this is before the market opened, Chartacus means the low of yesterday, which was 860. If we desire to continue to follow Chartacus, this means we should raise our stop loss order again this time to $8.60. So let's log into our brokerage accounts and do that. Keep in mind, the target price is still $9.05, so keep an eye out in case the markets decide to bounce up. If the trade is still live, we'll log back in tomorrow, see if Chartacus has made any further changes. See you then. We're back, and it's still day 3 of the trade we made on Monday. The $8.60 stop loss we set out for our stock hit today, which means it automatically sold. That is the importance of having a trade strategy. You can set it and forget it. Let's summarize how we got here. On day 1, we easily found this trade using the Chartacus High Performance Strategies tab. It was a trade signal generated by the custom-built strategy combination of strategy siege with tactic number 3. We entered the trade on Monday at $8.65 with a target price of $9.05 and with an initial stop of $7.94, which was risking about 9.5% of our trade. Please remember this was a simulation trade only and not one we would have entered due to the skewed risk-reward. On day 2, we went straight to the stock's Chartacus trade tracker on our dashboard to see if any adjustments were made to the limit or the stop. We saw right away that Chartacus detected increased risk in the trade and in turn raised the stop loss price to $8.49. Since we were following along with Chartacus, we did the same thing in our trading account. Here we are at day 3, and we saw in the Chartacus trade tracker that Chartacus detected continued risk in the trade and following its custom-built algorithm, increased the stop loss further from $8.49 to $8.60. So we did as well. Following along with Chartacus's risk management, we got stopped out this afternoon, sometime after 2 p.m. Eastern Standard Time. Hence, since our entry price was $8.65 and our exit price was $8.60, our loss was only 5 cents, or roughly 0.5%, or to be exact, 0.57%. Now ask yourself this. Would you have had the discipline to check the stock every day or maybe multiple times a day for 3 days straight and end up selling the stock for a mere 5 cents loss? Can you even take the time out of your busy day to monitor a stock or multiple stocks like that? Most people wouldn't even blink at a 5-cent loss and think to themselves that maybe if they held on a little longer, things will turn around. But that loss adds up day after day and trade after trade, and that's how traders lose all of their gains. By following Chartacus, you easily found a trade using a professional strategy that you most likely knew nothing about or even needed to know. Went in on a position, followed Chartacus's risk management of the trade, set the same target and stop loss that Chartacus did, adjusted the targets and losses only when Chartacus did so, then got stopped out with a minimal loss. You have lived to fight another day. How long do you think it takes professional traders to educate themselves enough to know and read the markets to get out of a trade when it's too risky? And how long do you think it would have taken you? If you haven't already subscribed for the free 2-week trial, then now is your chance. If you're already subscribed, we hope this video has helped you understand how you can still trade well despite having little experience and knowledge about trading. Good luck, and we hope to see you soon in the Trading Coliseum.